So now let's start with the topics you actually might be interested in, maybe. As I said, it's fundamental topics. It's not the deep lessons where you understand everything now, but you have to get an idea, because in the last session we just talked about order blocks, and of course most of you already heard about supply and demand. But for me, supply and demand goes a little bit deeper into the details than just order blocks. And in this lesson, or in this session, you will learn why this is the case. So what can we understand for a supply zone and demand zone? I think it's good. You can see here demand creation process, kind of. And something I have in mind is that demand is created when supply is broken. So you have here an area of demand and you have an area of supply, which we at the moment know as there might be an order block, there is a swing high, there's a swing low, there's internal structure. And if this swing high is broken, then we create a new supply zone. So if this swing high is broken, we create a new supply zone in this area. If this supply is broken, we create a new demand zone in this area. So from my experience, I will keep messing this up over and over again. I don't know why. I always change supply and demand, but from what I saw from other videos, I'm not the only one who does that. So please be patient with me. Same here. Supply is created when demand is broken. So you had here a supply zone, and you had your last area of demand, which was this one, because it broke this last supply area. And then this supply zone was created by breaking this demand zone. So if you can keep this in mind, that supply is created when demand is broken. And again, demand is created when supply is broken. Now we have, a little bit like a step forward. So when I look at my charts, I ask myself the question, who is in control? As you have different zones, you want to know if demand is in control or supply is in control. Here we can see demand is in control. We had a supply area. The supply area was taken out. And as it was taken out, it created a new demand area. And as it continued to do that, we can see that demand was holding. So demand was in control. All the way up in this uptrend, demand was in control. Why I'm repeating this over and over again? Because if you look at the charts like that, in terms of who is in control, you understand that you can trade between a demand and a supply zone, but you want to trade the strong side, which is, if the demand is in control, you want to trade the demands. In this case, probably the internal structure, internal demands. If this is a 4-hour, the black one is the 4-hour structure, and the yellow one is the 15M internal structure, and you know that the 4-hour demand holds, you could wait for your 15M internal demand positions which you want to trade. And this works for all the time frames, of course. It's a kind of different approach than we had before, but this one for me is a little bit more accurate. And in this case, you can see we continue up. Demand was holding until we reached that point when supply come into control. Why suddenly supply was in control? Because it started to break the last zone of demand, which was this one. This was our last 4-hour demand zone, which was broken. And from that point on, we knew supply might be now in control. And when we know supply is in control, we now monitor the supply zones in the other direction, because we can see now all the demand zones are taken out because supply is holding. And we want to trade the areas between the supply and the demand zone, actually, in the internal structure in this case. And this actually is exactly the same when it comes to our CHoChs. We have the same structure as we had before, just that we now say, instead of strong lows, strong highs, weak lows, strong highs, and so on, like this one here, we can now also see, additional to what we already know, we can consider now demand and supply areas. And the CHoCh, as we already said before, is a shift between demand and control and supply and control. But again, it's in fact a change of character, it's a reversal, it's a kind of shift in structure. However you want to call it, it always stays the same. So, and for this example, I took, I think, yeah, it was a GBP USD example in 4 hour. And what we learned so far was, you know, we look for market structures, we look for mitigations and so on. And I took this example here. You have what we know so far is we had here a break of structure. This is what we can read, just how we can read the charts. We have a kind of mitigation here. We had the downtrend continuation. And then if we consider supply and demand, we want to probably read the charts a little bit differently, a little bit in more detail, because so far you would probably say we had a break of structure here, and then who created this break of structure? Yeah, it probably was this zone here where we had the last, you know, opposite candle, or was it this one? We could actually map both, but that's exactly what I want to come in this session, or what I want to point your eyes on is read the candles differently. Maybe just not to confuse you, let's have a look first again on the Pew charts, because what can you see here? We had a break of structure, and this down move, actually this high broke the structure. Now, of course, you're interested in where would I find a potential trade in all of this up here? And then if you have a look where are the imbalances? Is there any inefficiency? You go candle by candle, have a look. Now you can see, well, here you can start, here you can see that the imbalance started. And before, you haven't had any imbalance. Everything is actually quite efficient. What is efficient? If the wicks overlap. So if you have all the wicks overlapping, then everything is actually efficient. So if you have a look down here, you can see there is a big imbalance. And who started then this break of structure? Which candle was it? And in this case, you would actually say we had a down move, an up move, and you can see this down move created all the imbalance here. So you might be interested actually in this down move, because this was where the inefficiency and the imbalance started. Everything else above was efficient, and you probably might not be as interested in this as in this strong move. Now we have it marked up a little bit, and you can see there was a small imbalance here as well. I marked it up. So this would be a zone you still might be interested in, and you would have two zones in this fact, but it was this one who created the huge imbalance, and which still has some inefficiencies as well. And now you can see price came back up exactly to the zone we have highlighted. And you can also see this wick actually balanced with this one down here. That's why I made this horizontal line, which might make this upper zone not as valid as it was before. So you consider this one first. You still can have two zones. And now if we see this one, of course, we want to have some kind of further, yeah, well, I say further confirmations, although there is no confirmations in trading. However, you want to have a look what was happening in here, because this zone is a zone of interest for us. And what happened in this new formed supply zone? You remember the demand was broken, supply is created. Of course, this might also be a supply zone, but however, this one was the supply zone who broke this structure. So let's have a look what happened in this supply zone. So, and if we have a look now, we can see this was the breaker structure. We are now on a 15 minutes time frame. We still have this imbalance marked up. And what happened in this zone? And what you can spot now, again, you start from the top to the bottom. And what you can see here, we have here this wicks overlap, and all of a sudden you have a zone within this zone which has imbalance. You know, the wicks don't meet each other, and then the price continues to go down. So we might be interested in this inefficiency. So we mark up this inefficiency. In this case, it's pure hindsight, I know, but for teaching, that makes it all easier. And you have to go back and just consider now you are in this situation. You know this move started from here, it broke structure. We want to find out what happened in this move. Is there anything which we might be interested in? Is there any inefficiency in this zone which price might target to? If everything is efficient here, price might probably doesn't want to come back here, but there is no reason. So if there is something, we will have a look and we mark it up like we did here, because we found an inefficiency here. And we can then see what price did. It just came back to close this inefficiency, not more, not less. And it dropped further from there. All it wanted to do was coming back to this zone. And you could not see it from here because you can see it just wicked in and then continued to go down. But you could have recognized it if you see this is your zone of interest. And then you evaluate this zone for further hints. Let's say it that way. And again, it's just 4 hours, 15 minutes. You can see the wicks don't meet each other. This zone was not so far mitigated, so there might be an interest of the price to come back there, and that's what it did. And that's just a kind of different kind of reading the price action and the candles on the chart. So for supply and demand, I know that's still very fundamental, but for supply and demand, you ask yourself, who is in control on what time frame? And then if the 4 hour demand is in control, you consider bullish trades on the 15M. And if the 4 hour supply is in control, you consider bearish trades on 15M. And the same is for 15M and 1 minute. It's exactly the same thing. You can break it down to any time frame pairs you want to actually. And of course, I know that's only kind of the surface. There's much more about supply and demand, more about how to refine the zones, to read candlesticks, and also kind of supply and demand flips. But again, this is just the beginning. We want to introduce you. We want you to see things differently and to see that what we show you is not things we just invent, but they work, not always, of course, but there's a reason for price doing what price does, let's say it that way. And you can find it out by reading the charts by recognizing things which you have probably not recognized before.